In accounting, transaction about prepaid and unearned. Prepaid means paid in advance, and unearned means received in advance. Prepaid is assets. On the other hand, unearned is one kind of liabilities. So the transaction about this at first, insurance paid in advance taka 24,000 in cash. What is the journal of this transaction? Paid in advance, that means prepaid insurance. Prepaid insurance debit taka 24,000 and cash credit taka 24,000. Prepaid insurance, that is assets increase. So prepaid insurance is debit and cash credit assets decrease. So cash is credit. And another of the same transaction, that is paid insurance in advance for 6 months taka 30,000 in cash. The same transaction. What is the journal of this transaction? Here, prepaid insurance debit taka 30,000 and paid in advance, that means cash paid. Paid, that means paid in cash. So cash decrease, cash credit taka 30,000. Here is the assets increase, which is prepaid expenses, and cash credit, that means assets decrease. Assets increase, on the other hand assets decrease. Cash assets and prepaid insurance also assets. Next, the same transaction, paid 24,000 cash for 1 year's insurance policy. Same transaction, but language is different. That is cash for 1 year insurance policy. That means this is the one kind of prepaid. So journal of this transaction, prepaid insurance debit taka 24,000 and cash credit taka 24,000. And from this transaction, when expires of prepaid insurance, that is the example of this, May 31st, at just 1 month prepaid insurance expired. Expired, that means has been expenses. So the journal, this is the adjusting journal. Insurance expense debit, but what is amount of this? In previous transaction, that is 24,000 for 12 month. So 24,000 divided by 12 equal to 2,000. That is 2,000 from previous transaction from prepaid. So prepaid insurance credit 2,000. That means prepaid insurance has been expired by 1 month. That is 2,000. Insurance expense, that means expenses increase. So insurance expense debit, and prepaid insurance decrease, that means assets decrease. So prepaid. And another transaction is for prepaid rent, such as paid rent for 3 months in advance on the shop space taka 6,000. 6,000 for 3 months, that means prepaid in advance. So the transaction of the journal, prepaid rent debit taka 6,000 and cash credit taka 6,000. Prepaid rent debit, cash credit taka 6,000, and also our prepaid rent, that is assets. And this transaction in another language, such as paid 3-month rent in advance at the rate of taka 2,000 per month. So this transaction is also prepaid rent. That is prepaid rent debit taka 2,000, no, 2,000 into 3, that is 6,000. 2,000 per month, that is 2,000 into 3 for 3 months equal to 6,000. 6,000 prepaid rent debit and cash credit, that is 6,000. And another transaction from previous prepaid rent expense, such as 31st May, adjust on 1 month's prepaid rent expired. That means 6,000 for 3 months. But what is amount of 1 month? 6,000 divided by 3 equal to 2,000 has been expired. So rent expense debit, which is expired, 2,000 rent expense debit and prepaid rent credit, that is rent expense 1 month has been expired, expense increase, so rent expense debit and prepaid rent credit, that is assets decrease by 1 month. An amount of 2,000 equal to 6,000 divided by 3 from previous transaction. And next, recognize that 1 month's prepaid rent expired and became an expenses. So this transaction is same. That means 1 month's rent has been expired. So rent expense debit, take a 2,000 equal to from previous transaction 6,000 for 3 months. So 1 month equal to 2,000. Expired, has been expired, that is expenses. So rent expense debit and prepaid rent credit. So these are the transactions about prepaid expenses. In the next video, I shall try to discuss about income or revenue. Income or revenue. Thanks to all for watching this video.